Stock Market Explained. Do you know that the stock market is the greatest opportunity machine to accumulate wealth? In fact, it's the proven method to gather wealth faster in a guaranteed legal way. In this video, I will explain the share market in simple language, then show you how you can make money effortlessly with simple investing technique. But before we get lost in the content, like this video and subscribe to this channel as I share value-based videos that will help you achieve financial freedom faster. In September 2021, the total US stock market was valued at $49 trillion. With the right mindset and strategies, you can easily attract a tiny piece of market value to yourself. So what is stock market? Let's understand with a simple example. Josh started a pizza shop with his funds, and within months, due to increasing sales, he opened 2 more stores. To support the boom of his business, he decided to buy new pizza machinery, hire more staff, and open 30 new stores around the country. At this stage, he needed money, but his friends and family already lent him money, and the bank is not willing to lend him a big sum of money without proper collateral. With no definite source of finance, he decided to enlist his company in the stock market. He issued 500,000 shares at $10 each to the market. As his margarita pizza was already famous in town, people bought all the shares through an initial public offering or IPO. The business expanded further and the company's share price started to rise. He paid a dividend of 50 cents for each share. Seeing the prospect of a future price increase, some investors bought shares from initial investors for $25 each. As time went by, a couple of nasty food poisoning incidents were tied to a few pizza shops, which was terrible for business. This incident caused the share price to fall. Later, the local government supported the company by providing grants that restored confidence amongst investors. Seeing the growth and cash flow in the industry, investors wanted to buy the shares, and inevitably the stock price started to rise again. Josh's story is an excellent example of how the stock market works. So what is share market? Share market provides facilities to companies so that they can come to a place to sell shares and investors buy those shares. Prices rise and fall depending on profitability and internal and external events. You can think of share market as a supermarket of stocks. A supermarket sells products from farmers and suppliers to customers. Sometimes, customers can get a product at a steep discount due to oversupply. At other times, the price of the product increases due to low supply and high demand. Thus, supply and demand play a huge role in the stock market price. When you invest, you own a fraction of the company that issued the shares. The stock market is a genuine way to accumulate wealth. As the company grows, so does your wealth. You can become rich either from the increasing company share price or by receiving higher dividends. For companies, investing in the stock market is an intelligent way to raise funds to support their operations and expansion. So, what is stock exchange? A stock index is a calculation that measures the value of a collection of stocks. Generally, an index represents the value of a market as a whole. For example, the Dow Jones Industrial Average tracks changes in how 30 very large American companies trade on the stock market. The S&P 500 is a stock market index that is made up of 500 of the largest stocks on the market. It measures the performance of American companies and is one of the most commonly used stock indexes in the world. Every country has their own market index. So how does the investor get rewarded? The simple answer is dividend and capital gains of the stocks. Not all stocks pay dividends, but many do pay dividends. Dividends are payments made to shareholders based on the company's income and are paid quarterly. In the long run, the average annual return on the stock market is 10%. After deducting 2% inflation, the net return is 8%. So now the question is, how to pick up winning stocks? To pick up a winning stock, remember this quote: invest in a stock you have a good understanding of. You don't need to understand every financial aspect, but don't go into an industry you have no idea about. For example, back in 2013, Tesla was very much a new concept. The share price was in bearish mode. Tesla was trying to create a new product, which no American auto company did so far. They knew that zero carbon emission would be the big thing of the future. They knew that it was time to change the auto industry. That time, few investors resonated with Tesla and bought the shares. Even though the company was not profitable, but the future was promising, people invested in shares, just believing that it will be big one day, and they understood the trend. Fast forward today, the share price shot up from $20 in 2013 to $1,100 in 2021. What is the trick to pick up a winning stock? Before I share a special trick, let me share an interesting story. There was a competition among two groups. One group was a bunch of 12-year-olds. Another group was a few chartered accountants, and they were told to pick up stocks. The 12-year-old group picked up stocks of which company's products they were already using, like Cadbury chocolate, Coca-Cola drink, and Disney toys. On the other hand, the chartered accountants picked up stocks after lots of analysis. It turned out that after 5 years, the companies picked up by 12-year-olds did well. So the trick is to pick up stocks of which products you're already using, have good future prospects, and fundamentally strong. How to calculate fundamentally strong stocks. To calculate fundamentally strong stocks, you can do some ratio analysis. The most important analysis is the PE ratio analysis. The pricing earnings ratio, or simply the PE ratio, is one of the most popular metrics for determining how expensive a given stock is. The higher the PE ratio, the more expensive stocks are considered to be. This ratio is called the price multiple. You can simply divide the current market price by the earnings per share. At the time of recording this video, Tesla PE ratio is 330. That means your 330 investments will earn you $1. In contrast, Toyota PE ratio is 930. You must decide carefully how much to invest in which stock. What if you can't pick up stocks confidently? There is another method called index investing. Instead of stock picking, Buffett suggested investing in a low-cost index fund. I recommend the S&P 500 index fund, Buffett said, which holds 500 of the largest companies in the US and have for a long time to people. How to buy stocks and index funds. To buy stocks and index funds online, you can open a brokerage account. Once you fund this account, you can start buying stocks. There are a good number of online discount brokerage. You can check out Robinhood, Schwab, eToro, E-Trade, Webull, etc. Based on my personal use, I can recommend M1 Finance. You can start investing as little as $100. It's possible now to buy fraction shares of Tesla, Apple, Microsoft, Google, Alphabet, and many others. While picking an online brokerage account, always consider the costs and investment style. Some investors like buy and hold approach, and others try to do day trading. Best strategy to invest money. Dollar cost averaging is the best strategy for beginners. It means that you invest fixed amount of money into buying stocks every month. The idea is that some stocks go down in price and some go up. So by spreading out your investments over time, you'll get more shares when prices are lower than average. You can also dollar cost average with mutual friends or other types of investments. In the meantime, if you see an opportunity that stocks prices came down, you can invest more. If you follow the news, you will remember that one janitor regularly invested and hold the stocks for longer. This gas station janitor with modest salary income had amassed $8 million. He shows us how to invest regularly and hold stocks for longer to become a secret millionaire. Now let's discuss what is day trading. Day trading is the act of buying and selling stocks within the same day. Day traders usually buy at lower prices and sell when the price has gone up. Since the price of a stock can be affected by market volatility and can change within seconds, day trading is not for everyone. As an ex-banker, I would suggest you stay away from day trading. Unless you have long-term experience and lots of money to lose, you shouldn't try day trading. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. As you know, there are lots of strategies to make money in the stock market. Amongst all, if you can pick up the companies which are fundamentally strong and apply few basic techniques, you can guarantee that your investment is almost safe. You can't become rich overnight. It's hard to make money consistently in day trading. However, you need to understand the fundamental and technical analysis. To master stock market investing, check out this book. This book describes everything you need to know to make money on the stock market. You can master in stock market investing within 2 hours. If you find this video helpful, do consider subscribing to our channel and like this video. Most importantly, share this video with others so others can learn about stock market in an easy way. Peace out.